Hello and happy morning. I believe that we are battling a few issues. As you can anticipate, your product, Hopper, which continues to generate the majority of our sales, is beginning to slow down as a result of our switch to Blackwell. Custom silicon, or ASICs, are currently quite popular, as demonstrated by Marvell and Broadcom. Those factors, in my opinion, are hurting the stock. I continue to believe that Blackwell, Nvidia's product cycle, is the narrative when you think about 2025 and AI. They'll have a fantastic second half of the year, in my opinion. Although I believe the stock is incredibly appealing at this level, I do believe we have these transitional concerns as we move there. Because it's unpredictable, I won't say absolute bottom, but it's really alluring right now. Compared to some of the AI counterparts, I believe you are trading at a far lower multiple. And I firmly think that in 2025, they will surpass custom silicon in market share. Although I'm thrilled about the custom silicon trend, I still believe Nvidia can increase its market share in comparison to that in 2025 because of its robust product cycle. As we sort of get into that latter half, we believe the stock trades well above 150. 150 year-end? In other words, Joseph, if we celebrate the holidays together one more, we will be 150. Or 156 months away. Sorry, but I'm out for 12 months. Yes, we anticipate, I believe, that our price goals will be in the high 150s in a year. What sort of multiple are you placing on that 12-month out at 150? Comparatively speaking, how would you evaluate that against whatever you believe to be the top comps right now? In 2025, I believe we will have a mid-$4 figure. In 2026, we anticipate more than $5. Those figures seem extremely modest to me. When there are times of significant growth ahead of us, we've seen the stock in the low 30s kind of level, and I believe we have that. Looking at where the Marvells and Broadcoms are trading based on our estimates, the peers are now trading more like the high 30s. That seems like a very realistic multiple to me. They have large margins, and you're dealing with these transitional problems once more. The stock may still be impacted by all of that. Although there are still some indications that the production of older products is beginning to slow down, Blackwell is incredibly resilient and their demand is extremely high. Tell me your calculations regarding the China aspect of this, since I believe that the tariff story and whether it will have any effect on this firm are among the major questions. Yeah, unfortunately, their options in China are already rather restricted. One of their products, H20, satisfies U.S. export control requirements. They produced a fairly respectable amount of that product, but I believe that we're going to see a slowdown nonetheless because those export control limits are so far below the state-of-the-art in terms of what Blackwell can accomplish. In my opinion, you are therefore protected from the Chinese market. There aren't many expectations there, in my opinion. The majority of AI gear, in my opinion, will simply be installed outside of China. And to the extent that Chinese businesses are using AI, they will most likely do it in places outside of China. Therefore, I don't believe that the tariffs will have a significant direct effect. Nvidia, in my opinion, wants to cater to those markets and prevent internal or Chinese incumbent solutions from invading their territory. However, they are forced to live with the export control thresholds. That seems insignificant in contrast, but I believe it will be a slight obstacle next year. However, we must move quickly. What would you buy if you didn't purchase Nvidia? Which option would you most like to use for your entire space? Indeed, outside of the entire space, Nvidia is our top choice. Beyond that, I believe we've really appreciated Broadcom as a name in the AI field. Although it has obviously had a tremendous run in recent days, we believe that Nvidia will surpass them in 2025, which makes it amusing that we're witnessing these. We must remember that there is $7 trillion in cash on the sidelines, which generally indicates that risk-free assets make up a larger portion of portfolios. In 2 years, I'm not sure if it will be at 5%. Therefore, I believe that investors will find the case for stocks to remain strong at this time as they plan ahead and observe a resilient economy. Invest in small-cap stocks, cyclicals like the financials, regional banks, and industrials, as well as cryptocurrency, particularly Bitcoin, and some proxies like MicroStrategy and SAR, that stand to gain from a Trump White House or a dovish Fed. Following a decline of almost 10% from its closing high in early November, Nvidia's stock is now in correction territory. John Vin, an equity research analyst at KeyBank, is now joining us. John, I like your approach to this. It almost makes me think of a quote by Ben Franklin. Everything I could possibly need is in your possession. You have a bull argument. You tell me your estimate of the bullish earnings per share for fiscal year 26 and what a premium multiple would be, and then you explain why. Additionally, you have a bear case with a lower multiple and a significantly lower forecast of earnings per share. You've given me a lot of explanations for both, but nobody truly knows. But in the end, you realize that you have too much of the stock, which has a 180 price objective. Let's review a few bull and bear scenarios. The prognosis and the most recent earnings were both fairly strong. Yes, that is accurate. These folks keep hitting statistics that are higher than expected, you know. Estimates continue to be revised upward. They are about to launch Blackwell, a new generation product that will provide them a step function boost in terms of pricing and simply improve their customers' performance in AI trading. You provided numerous compelling arguments for why it would continue to surpass rivals in the GPU and AI markets. You may get to $200 if you were to take your high-end estimate of $530 and multiply it by 38. Even though your price goal is 180, let's discuss the bear scenario. Due to the fact that nobody talks about it much, if you assume that earnings per share could miss $350 instead of $530, you're down to $100 if you multiply that by 29. Thus, you can arrive at a fair value range of $100 to $200. What is included in the bear case? Yes, there are a few factors that are driving the bear market, and these two factors are also likely contributing to the stock's most recent decline. Correct? When it comes to their market share, these people are in control. They most likely hold an 85 to 90% share. Therefore, if you are an Nvidia customer, you currently have two options. Correct. You have two options. You can purchase another merchant solution from AMD, which is most likely the second largest merchant supplier of AI silicon, or you can create your own, similar to Google's TPU. As a result, I believe that some of the recent worries are being sparked by Broadcom's announcement last week that they are currently working with 3 significant clients to develop AI processors. Correct? It's Google, Meta, and ByteDance in China. Their AI revenues are expected to treble in 3 years, according to their TAM prediction of $60 to $90 billion for fiscal 27. Therefore, if you do the arithmetic, that would suggest that Nvidia might lose some of its market share. Correct? Thus, those would be some of the issues causing the current short-term decline in Nvidia. In the long run, you might not be the only game in town, I suppose. But after considering everything, you still believe that this item, which costs less than $130, is a good deal. Yes, without a doubt. I would mention a few things you know. First of all, we are not now engaged in a zero-sum game. Correct. The market for AI is expanding at a rate far above 100%. In 2026, it is likely to rise by 60 to 70%. As a result, the total TAM has grown significantly. There are several winners in this case, including Broadcom, Marvell, and Nvidia. They will all gain from it. Although I believe AMD is making some decent strides in that direction, the introduction of Blackwell represents a significant performance improvement. Accordingly, we believe they will continue to hold a sizable portion of the merchant market. Broadcom and Marvell are clearly going to play a significant role in the custom AI space, since they have large clients who are spending a lot of money on research and development to create their own AI chips. However, there is some degree of doubt. There is some doubt as to whether a hyperscaler or other AI provider can successfully create their own AI chips, aside from Google at the moment and possibly AWS to a certain degree with Trinium.